a lovely 128 point short trade here on the German DAX. On this video, I'm going to show you exactly the components and the ingredients of a topping pattern and how you can spot those every single day when you're trading the markets. Before I dive into that, guys, don't forget to subscribe to the channel and also click the like button. We're going to be doing plenty more of these training and coaching videos. That's what we do here at Trading College. Okay, let's dive into this 128 point drop. We've got the red pro trend system. We've dropped about 128 points since Friday. Now, the DAX has been in a major bull market. It's been incredibly strong. Why on earth would I be looking to short this market? And the answer is structure. The trend structure is so important, and it's nothing that's complicated. So what I'm looking at here is you want to know where you are within a trend, and this is why this short is so important, this lesson is so important. When you're looking at a candlestick or where the price is on a chart, don't necessarily look at what's currently happening right now. Look back. Okay, so take a look back on your chart. The topping patterns always come after a big move higher, a considerable move higher, and I would say from here to here, that's been a pretty strong move. I mean, it's been about 16,800 on the DAX to 17,800, just 1,000 point move since February time, the end of February. Okay, so it's a decent size move. Now, who is left to buy up at the highs? If you haven't bought the DAX from here, here, and here, and here, then who's buying the highs up here? People coming late into the market. There's going to be people short in the market, and there's going to be people taking the profits up here, of course, as well. So always, wherever you are on a chart, if you're just about to pull the trigger on a trade, just think, how far have you come on this move? Because a reversal is likely if you've moved too far. So we've got a buy signal, which is our green pro trend system tracks here from a red, and then a new set of green pro trend system candles and tracks up. And I would say from an Elliott wave count, this is probably a wave 3. Then we get a series of reds and greens, and then get a new thrust to new highs, and we break out here. Now we break out with a big wide range candlestick, which is this one right in here. And breakout trades at the top of a move often come with wide range candlesticks, long candlesticks, because of the excitement, because of traders that don't really know where they are at the top of the move within this structure. That is, and orders are getting placed here. Orders are getting triggered with brokers as well. So it's that excited last phase move, and it's really not for this video, but when markets are going to reverse after a big move, it tends to happen quite quickly, the move up. The excitement of all those breakout traders buying the highs, getting on that move to the upside, and fear kicking in when the markets start to reverse. So what's basically happening, we'll get back to the structure in 1 second, is when you see breakout traders and they put a line across the high, now the breakout occurs here with excitement of making money, and it happens with a fast candlestick normally. If you go down to a 5-minute chart, you'll often see it moving really fast. And have you ever been in a trade before where you're in it, you're making money for a few seconds, then suddenly it completely turns around and drops dramatically the other side? Well, that's a lot of orders being filled, a lot of excitement at the top of the move. It doesn't happen at the start of a move. You know, we've only had 1, 2, then you can get the breakout, that's fine. 3 here, that's fine. But when you've gone 1,000 points to the upside in only a short period of time, then people that are unfortunately thinking they've missed out on this trend and want to get into the market, it's often the end of this phase. Okay, now looking back is important, but also looking down is really important, because you need to have a little look at where your momentum indicators are. Because I'm sure you've heard of divergence, and divergence come at the end of trends a lot of the time. I mean, I've been trading divergences for years, guys, and there is a way of doing it. And I'm telling you now, it's often when there's excitement in the markets that it's going to go higher, and it's often after it's had a very big move. So here's a 1 and here's a 2, and I'm going to talk to you now about what should happen next. So as we do it here in real time, as the price is actually moving, we'll see if it actually does happen at some point. Because ending patterns, end of trends often happen like this. So you've got this divergence. You've got this situation where you've come from a long way, 1,000-point move, all the way up here. Then you've got the other component, which is the two-wave divergence. Now, you might be looking at this thinking, well, okay, I might feel a little bit confused on this two-wave divergence. When you see a divergence, okay, and they don't always work, of course, because divergences can be just a slowing down of a trend. It doesn't mean it's going to completely reverse, but you've got to have the other component where you've come from a long way away in a points or a percentage movement. And you can measure that by just going into a drawing tool and just see how many points has that gone up. I mean, it's gone up for 23 days. It's gone up 6%, over 1,000 points, as we said. It's a good move. Lovely pro trading system TRAX, by the way. So when I get a divergence after a big move like that, then I know it's pretty much going to be a profitable trade. Now I'm using the 4-hour time frame, and for me, a 4-hour chart is great for people that struggle with 5 and 2-minute charts to day trade, but still want to have quick profits, because a 4-hour time frame allows you to become a day trader in a way, but it's slower for some people and it suits some people. Certainly some people I'm coaching, they just like to see slower markets. Even the DAX is quite volatile at times. They like to see slower markets, and the 4 hours suits them perfectly, and their personality type. And you know, we're very big on personality profiling here at Trading College. So you get the divergence and you've got the component. It's come from a long way. It's come from 1,000 points. Then you get the divergence with the two waves. So your momentum indicator is way down below the previous peak. Okay, so there's the high, and this is the lower high right here. But price has made a new high with that excitement of that breakout. Now what you could do, and you might see me doing this before, you draw the Fibonacci extensions, and that allows you to give you a heads up at the 1272 fib extension, and then you've got this 1618 fib extension at the highs up here. Price, if you get this whole structure right, price doesn't often get above the 1618 fib extension, but we'll talk about fib extensions on another video. But that's the components: long way and the divergence and loss of momentum on your momentum indicator. Now we come down, price often comes down to previous support, okay, and this is that wave 4 pullback. And I'm not a big Elliottician, even though you've seen me probably speaking on the IGTV with Elliott wave. I think counting subwaves in an Elliott wave move is a waste of time. But looking at structure like this really is clear and something that will help you with your trading. You can see it's had 1, 2, 3, and 4, and a 5 here. So if this is a 128-point pullback here back to support, which is good, now the price should go up. And what we're looking for then is our other indicator. Our other indicator then has to start to get into the red zone here. If it starts to get into the red zone as price is going up into here, now we're fitting a perfect Elliott wave formation, because what should happen is the price should go back up into this area here, the pro OBS indicator in here, and then there's a whole other mindset shift around this area, guys. And let me explain what happens next. So traders that bought the highs right up here are obviously getting stopped out, and then you see the price go higher here. And what it means as well, is people that missed this long, think that it's going to start breaking out to new highs. It can do that. It can do that. But what you've got to look out for, because the next move after this push up could be really big. You get all the hope traders come in and they hope it's going to go higher because it always has gone higher, because it's been in a massive move higher. Now what happens is there isn't enough buyers stepping in here to push the market higher, because you know all the buyers are in here on the way up. So what happens is it runs out of buyers, the trend, and then it rotates and rolls over, and is often a very big move back into the wave 2 pullback here. Remember 1, 2 here, it'll often get into this area here. And I'm going to show you here exactly where to measure this move, because get ready, it's a great move. It's a great move. I'll talk to you a little bit about the gold trade I took back in 2012, where this whole structure took place, very similar, how it was a huge move that lasted for years. You see, we've got a bit of a hammer candlestick forming right here. We're likely to push up into this area, the hope move I call it. What you could do is get your fib retracement tool, take it from the high down to the low. All right, really easy. Let go of it, and then you should have your fib areas. Once again, we've got that golden ratio, 61.8% fib. Doesn't always get there, but what we're looking for is it to get into this area here where the hope traders come in, well, are actually not in, they're already in, and then it fails, and then it turns back to red. So we might go higher here for 8 hours on a green PTS, which will be a nice profit higher. But then it's the key. As long as we stay below the recent high and turn back to red here, this thing, I'm talking about this price, this market, and this happens on any price action chart, could roll over and provide a really big move. And that big move could happen because there's all those stops just underneath this area here. So watch out for that sort of hot zone, which is around that 61.8%. Take the swing from the high down to the low and watch for that hope move into that area. Your stop placement could be above here, and your entry could be the ProTrend system short. If you don't have the ProTrend system and TRAX, which are these 3 dots here, then what you could do is just put an order below the low of the last candlestick and a stop at the high of that last candlestick. And if it carries on going, you won't get filled in the trade. But if it breaks down, then you're in that trade. And often with a 4-hour time frame, it could be at the same time you're going to bed. You put that order in, and it could play out literally overnight for you if you wanted to. So let's look at components of the trend. This happens all the time. You've got a nice trend from the beginning. It starts on the left hand side. What a beautiful move higher. You get nice continuation, clean charts, buyers stepping in, hardly any pullbacks. And as you get into the end of a wave 3, which is a strong, powerful, it's come from a strong, powerful trend, you tend to have like a zigzag pattern, sideways price action. And then the thrust to new highs becomes with a breakout, a fast candlestick, and normally a wide range candlestick. Remember the reasons. It's the excitement of the price is always going to go higher. I'm going to place buy orders, because you'll get people putting buy orders in here, not a sell limit order or a buy limit order. It is a buy stop order, and it breaks to new highs, but it cannot continue because it's run out of buyers, and it then comes with a 1 and a 2 wave divergence, often at the 1272 fib. And then you get the 128 point drop that we've had on the ProTrend system back into wave 4 pullback, where it's just basic support. And then you get the hope move. The hope move is up into here, and then you get the decision point. So we look at 61.8% right here. Terrible drawing there. From here to here, and now stop could be at the highs, or you don't have to put your stop there, but that's where this trade is going to continue and where that structure is not playing out. But then this move, if it stalls at 61.8% and rolls from here and turns from green to red, it's a big move back into wave 2 start, which was the end of 1, 2, and that consolidation area as we go into the start of wave 3. All right, and it's a great move. It's a great move, and we often trade the start of wave 3, and we often trade this A, B, C, which is often referenced in Elliott wave, and it's so powerful. It's such a profitable trading structure. Let me talk about, before we get into gold, let me talk about, if it doesn't work, what happens next, because that is so exciting as well. So let's drag it down a little bit here, price action. You know the structure, and we've got over that enough. If we start to push here and we turn back to green and we break the high, that means we've not had a red to short. So our red on the Pro Trend system tracks would be, which are these candlesticks here in our system, would be your signal to get short. But let's say we didn't get any reds and it turned back to green and it broke the high. Well, that means that the structure is still continuing up into a wave 5 here. Now what's going to happen then is that your momentum, or our storyteller indicator, is going to be lower. It's going to be down here. So what that then creates is a 3-wave, a 1, 2, 3-wave divergence. Look, and look, if you're not a trader and you know, you're just, you don't understand what structure is all about, you won't know this. But if we go up and break out to new highs, and how fast will the candlesticks go if we break out? They're going to go fast, aren't they? The candlestick's going to move fast because that excitement, all those orders being filled. If we have a 3-wave, that is devastating to a trend. That is devastating to a trend. It is one of the most high probability trade strategies on this planet. A 3-wave divergence at the end of a 1,000-point move or a significant trend is often the whole breakdown of this whole trend. And what happens at the top of this 3-wave? There's the 1, 2, 3. As we break here, what do we do, guys? It comes all the way back down to support. The hope move kicks in again. As long as we don't break above the high, we rotate back into that wave 3 and we go down to the 2-wave, the start of wave 3 down here. All right? So it keeps repeating over and over and over again. And you'll end up getting a fantastic move to the downside. Yes, you could take the long side, but you've got to remember it could well be limited because this rotation down. Let me show you gold, how that panned out on a completely different time frame, and let me show you how powerful and profitable it can be. Okay, so here is the monthly chart of gold, and I want to take you back to 2012 because that was the big reversal in gold. Now let's take a little look on the left hand side of gold. From 2002 we had this lovely bull market and we exploded higher on PTS. Now we had, look at the size of the candlesticks up at the highs right here. Now we didn't get divergence, and I reckon 8 to 9 times out of 10 ending patterns happen with divergence, ending trends happen with divergence, but we didn't get it. But this is a monthly time frame and we sold off from that area. But look at the end of the trend, look at the wide range candlesticks. If you're not buying here or here, why would you buy this high up here? Okay, I'd rather buy the pullback to then get a decent price and good risk reward. But then it's the move down, end of a trend, and then we get the hope rally. For 2 months and 3 months we had a green PTS. Now at 1,690 it pushed beautifully higher here to 1,796, but it ran out of buyers. You take your fib and you take it from the high to the swing low, and there's the 61.8%, the fib golden ratio. If it fails around that area and doesn't break to new highs, then it's vulnerable for the wave back down. Okay, and it doesn't always have to be divergence, but the majority of the time it is divergence. So down, up, stalls at 61.8%. We don't break above the high. We break below the low of the last candlestick, turns red on the PTS. We drop for years and years back, nearly back to this support area right in here. And only now are we starting to get, above these all-time highs, which is great for gold because I'm long gold. And it's been an absolute beautiful move. But for years and years and years, gold was sideways from 2012 all the way to 2019 until we started this new push higher. All right, so that was a beautiful move. And I remember somebody saying to me at around this area, and it should be it was the end of the summer in here. And I remember being I won't go into details exactly where I was, but I was in a jacuzzi in some party somewhere, and somebody saying to me wanting to buy gold, is it a good time to buy? And I said, no, you've got to be really careful buying gold here. And I hope they listen, because for years on end, this market was sideways, guys, and they wouldn't have made any money whatsoever. So that is a really interesting structure. And let's look at Bitcoin, because Bitcoin, as it explodes to new highs today, we make this beautiful move higher, okay? And gold is Bitcoin is breaking out above this 70,000, which is fantastic. And you can see that the moves have been beautiful. Monthly chart is lovely, but if you look at the weekly chart here, just look at the weekly chart. And back in 2021, we had this beautiful wave 3 higher and push lower, okay, and then a new move. And Bitcoin technically on a chart is absolutely beautiful, because it's very much a sentiment market, isn't it? And people are bullish cryptos. As we make a brand new high, wide range candlesticks, we break out above this high with a 1-2 divergence. It comes down, a little bit of a hope rally in here, and then we drop back in to that support area. The charts are never going to be perfect. They're never always going to look exactly the same. But if you can get an eye for this structure, then it is a beautiful trade strategy to take. And so as Bitcoin continues higher, it looks like this. So I'm going to look at this and count from this being a wave 1, this being a wave 2, and now we're nicely into wave 3, which is never the shortest wave. If I take the fib from the low to the very high, we've got the 76.4% where it built that structure. It didn't break below 32,000. And then we started to see buy signals here and lovely tracks, lovely PTS. So we're going to extend all the way up here. And we're likely to get into some really nice sort of extensions right up here. And as I use some fibs, let's get some fibs in here. Let's look at the 1618. And look, 120,000 has potential, and that's the minimum requirement really for a wave 3 run up here, bull market. But this is a weekly chart, and just be careful, because it's so volatile, and I wouldn't be trading it in a leveraged account. But as we push up here, there will be an end to this trend at some point. And how will it end? Well, go through what I've spoke about. It could go up, go parabolic, move back down, up, parabolic into that area there, and then that final little push down. So we'll have that move there, and that will be lower there, and then that will create a 2-wave divergence, and then we'll get the hope move, and then we'll get something like this again, potentially. All right, and that could happen, and you fit the jigsaw into it, as in the price. It will fit lovely a lot of the time, but it's never perfect. It's not always perfect, all right? So just keep your eye out on it, guys. I mean, I'm bullish. I'm holding Bitcoin for many years to come. That 100,000 psychological area, I think, is looking to be played out, and that's what could end the trend, all right? So I'm watching that very carefully, but at the moment, there isn't any reason whatsoever to find an ending pattern in Bitcoin at all. And if you look at the Dow here, this is the Dow Jones on a weekly, well, on a monthly time frame. We've got a 1 high, a new 2, a lower high, you know, down, up, down into this zone potential. All right, but you'd have to use the colors, of course, to trade that. If you look at NASDAQ here on the monthly, we've got a 1 2, okay, 1 2, so down, and this is going to take months to play out if you're using just a monthly time frame, but we're hitting the 1272 with two-wave divergence, so down, up, down. Let's have a little look at the weekly on this. No reason to want to short this aggressively at all at the moment, but it also happens in long side trades, just not short in the market. And you can see we've had a nice pullback here with two-wave divergence, and we go up, and then the short sellers come in again here. Draw your fibs on this. We're going to take it from here to here. There's the hot zone, 61.8%, 76.4%, and then we go up into this beautiful bull market. My advice to you now is just go and find that structure and just pinpoint it, because I promise you, if you can literally see when that hope move comes in, then you can make some serious returns at it. It is a great pattern, and it is at the end of most big bull markets, and it could play out very nicely indeed, guys. Good luck with that. Get your eye in, see if you can find those sort of setups, and see if you can make some decent returns, because your risk is limited and the reward potential is great. All right, so don't forget to subscribe to the channel if you like the video. I'm happy to do more structure stuff with you, more trends, understanding, because I think this will take your trading to a completely another level when other people don't understand what trends are all about and how they're made up. So I'm hoping I can help you with that, and if you like it, make sure you subscribe to the channel, guys. Speak to you soon.